Good morning, traders from each and every part of the world that you're joining this series of the Daily Morning Market Call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM linking you to the global markets to access various financial assets in favorable trading conditions. Now, in our standard traditional procedure, we will begin with fundamental analysis to look at the geopolitical and economic forces moving the markets, so that we go to the charts and look at technical analysis to see the implementation of these forces in context to financial markets across various assets. Our concentration today is going to be on a number of items. Number one, we see the United States imposing a 10% additional tariff on the Chinese imports. We also see the United States government threatening to impose a 25% tariff on Euro imports. We also see attempts to have tariffs on United Kingdom, and finally, we see also the Canada and Mexico tariff said to be implemented from 4th March. So this is giving the markets a little bit of shivers. It's causing uncertainty, and it's going to affect the volatility and market direction in context to those particular tariffs. But before we proceed, I would like to inform you that it is going to be a pre-recorded YouTube video, to mean that you could access this YouTube video at your own free time on our YouTube channel at HFM Kenya. Kindly like, subscribe, click on the notification button below, and share this video widely. And it is our commitment that we are going to improve on our content that we post from time to time, to improve on our attempts to bridge the educational gap in the financial markets. Before we proceed to see the reaction of the tariffs that I have just mentioned, it's nice I define tariffs. Tariffs, we have said on this series that tariffs are imposed taxation on imports. It's tax hikes or tax altercations on imports by certain governments. Okay, so in this context, the United States new administration is trying to review the contracts of trades that they have been having with other countries in the world, other business partners in the world, and the new administration of Donald J. Trump has decided to review these imports by increasing the taxation. This, of course, these countries will not sit back and accept these terms. They will attempt to negotiate, or also they would attempt to retaliate by imposing also tax on imports from the United States. Most likely they will go with the first option of trying to negotiate to lower this tax, or completely remove them, or dissolve these tariffs. This is because the United States, as a country, as an economic powerhouse, the purchasing power of the citizens of the United States is quite high. We would say the distribution of wealth in the United States, of course, in context, is quite considerably high in world standards. So this country would want to negotiate rather than impose these taxes on United States as a retaliation tactic. However, countries like China, which we see a 10% additional tariff, will be quite hesitant. They will be quite hesitant to have a conversation. They will most likely impose tariffs on imports from the United States, and also reduce some strategic materials sent from China to United States, especially those which are in the context of precious metals, which are used in military and technology, because the United States has a high appetite for those particular products. So in context to that, today being on the 28th of February 2025, Yesterday we had GDP reports coming out, and the GDP for United States came out at let me find it. Gross domestic product. Came out steady, indicating that we are likely to. The United States economy is not doing bad. For Q4, growth rate for Q4 came out at 2.3%, which is actually the anticipated percentage. So we see a somewhat sustainable economy for the United States, at least the general health of the economy. However, these particular tariffs have a somewhat immediate effect on the market because of investors' expectations. And let's dive straight in and see what we mean by this. Nice. This is Euro USD. We begin with currencies. Currencies, at least the most famous asset class on derivatives that we trade on online trading. And we bounced off from this region that we had reviewed earlier in the week, and we are bouncing off to continue with the long-term bearish trend. This is the big Marabuzu candles that we are seeing with high momentum being bearish are could be said to be caused by the tariffs imposed on Europe. That's 25% tariff that the administration of Donald Trump wants to impose on Europe. So Europe is quite famous, for lack of a better term, in exporting cars, manufacturing cars like BMW, Mercedes. They come from Europe, and this 25% tariff is going to lower the demand for these cars, and is going to have an economic implication on the euro. That's why we are seeing the observation of this particular price action printing to the downside. Would possibly see it come and attempt to test or break out of the 1.02760 area of interest or support, if you may like, for price to continue printing down. Will, however, be uncovering more economic data, which is going to be printed from time to time. But as it stands, we are attempting to proceed with a downward bearish trend, which has been caused by the tariffs. The same effect we are going to see on GBP USD due to the attempts also to have tariffs on the Great British Pound. This is the Great British Pound. We see that we are bouncing off from this sense of key level right here. Price is attempting to come and break down below the 1.2635 and price to proceed printing to the downside. Again, this is because of the tariffs that have been said to be imposed also on United Kingdom. So we see quite an interesting 47th administration in the United States trying to renegotiate terms of trades that they have been having with their business partners or economic partners, if you may like. And we see all hands on deck. The administration is quite aggressive in negotiating this by imposing these particular tariffs, even on her long-term friends like United Kingdom. So quite a unique time to be in the market. On what effect does this have on indices? Beginning with US 30, we see that we are broken from the consolidation that we were observing last week, and now price is printing to the downside. This is because tariffs tend to cause fear, they tend to cause uncertainties. So the value of stocks and indices would depreciate as a collective basket as investors shift their investments to other asset classes. and that we are going to observe, and that's why for indices as basket of stocks, price is attempting to print bearish, despite the somewhat mixed reaction with a positive denote that we had from Nvidia earning reports coming out yesterday. A similar scenario we are going to see on S&P 500, that price is attempting to break on the downside and print bearish. On US 100 or the Nasdaq, it's quite clear price broke through this area of interest at 2101 2.52, and price is attempting to break on the downside. Would want to see how this goes, although going short on this particular asset could be seen as a risk on approach, to mean that it would be a more risky trade to be bearish on this particular asset, because the overall trend is bullish. So we'd want to see much more of a retest of key level and price printing to the downside to give us much more confirmation, and as we observe other geopolitical and economic news that is going to be coming out in the day. German 40 also is reacting to these particular tariffs, because German just had their election on 23rd of February. This is the previous Sunday, 2025. And this particular flip election we see a new shift in power from Chancellor Scholz to Chancellor Merz. And forgive my German accent, but the shift of power is coming with expectation of an improvement of the general economy, because we see the Christian Democrats winning the particular flip election and attempting to form a coalition government with other like-minded parties. However, be it as it may, the German 40 is not neutral to the tariffs imposed on euro, and we know the medium of exchange in Europe is the euro, and among the most powerful countries using in Europe is Germany, with Germany, France, and Italy composing up to 40% of the GDP of that particular regional integrated body, that is the euro. So it's having an effect on DAX 40 or the German 40, where we see price attempting to be bearish. We would, however, observe how it reacts when it gets to this key level. Will it break through, or will it bounce off? That is going to be a case of anticipation as we watch out for other economic data. But as it stands, it is attempting to go short and opened with a gap. And we know in chartered market technician, we say that 48% of the time this gap is going to be filled, but overall these tariffs will threaten this constant appreciation of this particular asset. Let's look on gold before we conclude. Gold is also has gotten to a key level here. It could be interesting to see the reaction of gold on this key level at 2662.74 thereabout. Will we see a bounce off in reaction to these tariffs and fears and uncertainty, or will you see a breakthrough under? Because when we study gold as a commodity and as a precious metal, the forces that move gold, of course, are the same economic and geopolitical forces, but with much more magnitude to geopolitical forces. Now, these geopolitical forces affect gold in this simplistic way. Fears and uncertainties which are brought by trade wars, which tariffs could be associated with trade wars, causes gold to appreciate in its value. However, at this time in place, we also have the Eastern Europe conflict, which was causing tension, and in the last quarter of last year, the last quarter of 2024, we saw gold appreciating in its value due to those particular wars. And now we see a negotiation attempt by the new administration of Donald Trump to end those hostilities by negotiating a deal which is going to see those hostilities come to an end. Of course, that deal is going to have implication, but the point at this time is the end of those hostilities kind of give the markets a relief from the fears and uncertainties if those that war would continue to proceed. Also in Middle East, we see a cooling of the hostilities between Israel and her belligerent neighbors, and this again is causing a sign of relief to the market. However, these tariffs, will be observing how it reacts from this key level. Will we break down or will we proceed to the upside? We will wait and see, but most likely we're going to have these markets react from these tariffs by injecting fears and uncertainties, and proceed with the long-term bullish trend, so that to have a risk-off approach. If this is your first time to hear about the financial markets and you are interested to look at various assets and how you could benefit from possible market direction, making possible profits, kindly get to your mentor who has led you to this chat box through their various social media channels, or also visit hfm.com, attempt to register for an account. In both instances of number one and number two, you will have to register for an account, which is completely free, before you get to the investment stage, and begin analyzing and speculating on the appreciation or depreciation of various asset classes. Our experts will get in touch with you when you register and attempt to fill in your details, and get you rolling in your financial journey. So as a disclaimer, this by any chance is not financial advice. This is purely meant for educational purposes, and as many of you would agree, the financial markets have got a huge gaps in the education of benefiting from the knowledge and commercializing it on the real charts, and that is the attempt we try to make on this series of the daily morning market call by HFM. So remember to observe risk management, and see you guys tomorrow. That is on Monday, sorry. The same place, the same time, to do things the same way that has proven consistently profitable. Until then, take care and God bless you all. Thank you.